Hi, Diego Sorno from MDO Mortgage, and thank you for watching our channel. Today we're going to talk about PMI. What is PMI? PMI is private mortgage insurance and is usually paid on two different types of loans, conventional and FHA. On conventional loans is required when you put less than 20% down. We'll talk about the types of PMIs that exist on the conventional side in a moment. But let's talk about FHA. It's a fee that is paid either to the bank or the lender who gets the mortgage insured against the collateral or the loan, so that should you default on the mortgage, it generally protects the lender versus when the property gets foreclosed upon. So let's say that you bought the property, you have a mortgage on $300,000 for this property, and the lender foreclosed on the property and they were able to collect $200,000. There is a $100,000 shortfall or deficit on your mortgage that this PMI covers or protects the lender. It protects the lender. And it works the same way with mortgage insurance on the FHA loan. So what is PMI? It's a protection for the lender or the investor against default. On FHA, the PMI is paid two ways. One is at closing. Typically or currently, HUD requires that you pay 1.75% and it is normally financed. However, people can pay it cash at closing. 1.75% as of the date of this video. Now, also there is monthly mortgage insurance with FHA loans regardless of the down payment that you're putting down. It's important to know that because regardless of the down payment, you have to pay PMI. However, there is a slight difference when you put more down payment on your FHA loan. If you have a conventional loan, you should be asking your broker or your lender, can you give me a quote for private mortgage insurance where I pay monthly? Or can you give me a quote when I pay the mortgage or the PMI private mortgage insurance at closing? Because you can and you have the ability to pay at closing all the cost of the private mortgage insurance depending upon how much money you're putting down. Also, there is something called lender pay mortgage insurance where the lender builds up on the interest rate and you have no PMI. It's important to know that this only applies to conventional loans. You cannot get rid of PMI on FHA unless you refinance. Okay, so now let's say that you purchase your home and you have monthly mortgage insurance PMI. You're paying on your conventional loan and you put down 5%. You have the ability without having to do anything once you reach that 78% of the original loan value, 78% of the original purchase of the property, the lender should automatically remove your PMI. That's number one. Number two, say that your property value has gone up. 80% now is owed on the current value minus the debt of the property. You call up the bank and they should be able to give you an appraisal, and depending upon each mortgage insurance or private mortgage insurance vendor that your lender used, they should be able to remove it if you are within 80% of the loan to balance on that particular loan. Generally speaking, they want you to be at least 2 years with your mortgage, so it's important that you know that and that your paying history is clean, so no late payments on your mortgage. Okay. When you're looking into refinancing, a lot of customers are going to be asking, Diego, so how about if this property has not gained 20% in equity? What if I only have 10% in equity? There are mechanisms or methods that mortgage brokers like us can use to build in the pricing in the loan where you have no PMI on your loan and you can still get rid of it by refinancing. So talk to a mortgage broker like us so that we can help you determine if it makes sense financially for you. Here's the good news for FHA owners, if you have a home and you own a home and you have an FHA loan, the good news is that the loan can be assumed, and I'm sure that we have a video in our channel where you're going to learn how to assume a loan, but FHA loans can be assumed. However, the PMI, unfortunately, cannot be canceled unless you put 10% down on your down payment. So let's assume that you have to have an FHA loan because maybe your debt to income ratio is too high. If you put down 10%, FHA will remove your PMI or your mortgage insurance at year number 11. Okay, so 11 years of you having your FHA mortgage, your PMI will go, your mortgage insurance will go away unless it's changed. This was before it was different. The Congress enacted a law where it required HUD to change the when the mortgage insurance canceled. So always make sure you check with your broker before you make a determination whether today is 11 years, but it can be more, it can be less. If you find this video informative and if you think you gain value, please share it with your friends and family, and thank you for watching our channel.